Although many people are looking for various alternatives to overcome recessions, the ravages of pandemic and war, today we can see that some assets are stuck at a point where they don't seem to grow, but their market price doesn't decrease either. Many minerals and precious metals are at that point, and in particular, although gold is very valuable, it is having a lot of trouble scaling up and increasing in price. Why? For certain issues that directly involve the dollar. Will the price of gold ever rise, even against the dollar? What will happen to the US currency when it becomes the order of the day? Will it suffer an even steeper fall than the currency is experiencing these days? While it is true that the dollar remains one of the currencies that has seen the least change throughout the pandemic, the ravages of war cannot be ruled out. The lack of certain commodities, hydrocarbons, and minerals also reduces the relative stability the currency is experiencing in the future. So, what will happen to the dollar? Will it be able to weather the difficulties ahead, or will gold and other precious metals finally gain the ground they've been losing? Before starting the video, it's recommended that you subscribe to the channel. Just turn on the red bell next to the title, and YouTube will turn on notifications every time new content is uploaded. Remember, we're talking about finance and big money here, so if you're interested in both topics, you can't miss the following videos. That said, let's see what's going on with gold and the dollar. One of the things that all investors should know is that they have different options in which they can invest. You don't have to put your money in a bank or put it in a business that you don't know will prosper. Today, they can buy bonds, invest their assets directly in a transnational company, and even buy assets that they can then sell at a higher price. Among those possessions they have the opportunity to acquire are purchases of minerals and precious metals. As you know, metals are one of the most stable assets that can be found on the market, and their value tends to increase or remain stable because of the market value at which they're paid for. Gold, silver, copper, and other metals are present in countless things we use on a daily basis, and likewise, there are still coins with a few grams of them in them. Gold has been the most valued and appreciated metal for years, and as time goes by, this metal continues to increase in value as economies continue to take it into account in their stock markets. In short, gold is one of the safest investment options, which is why many do not understand how it is that, despite the difficulties the world has faced in recent years, the metal has not yet risen to exorbitant levels. What is going on, and why is gold not above 1850, and why have predictions that it would rise to 3,000 not come true? As far as is known, gold is going through one of its worst moments as a stable asset. And no, that does not mean that it's losing value against other economies. It's just that the price of the metal has shown little significant change in recent years. Some economists expected that after the pandemic that has hit humanity, the inflationary crisis that the war has experienced, and the problem with the supply of raw materials, gold would rise to levels not seen for a long time. What did you find? With a precious metal anchored at a price of $1,850 an ounce. As far as is known, gold purchases and investments have received a major boost in recent years. After a period of active and even justified demand, a number of European, Asian, and other countries have bet on the asset as a way of boosting their respective economies. A clear example of this is Russia, which will take at least 1,500 tons of gold in the last 12 years. For its part, China is another giant that has bet on the metal and has made purchases of 1,400 tons. As you can see, many countries have followed the example of these nations and decided to entrust their government's funds to the precious metal. Poland, Turkey, Japan, Iran, Mexico, Kazakhstan, Hungary, and the list goes on. Nations urgently need a solution to help them overcome the current inflation, and for this reason, they have chosen to give gold a chance. Why not? If its value has changed very little despite all the years and hardships. All these nations were confident that their wealth would be safe with these purchases, and although they were not wrong in their thinking, as the months have gone by, it has become clear that their investments have not yielded the returns they initially expected. Why is this happening? Financial guru James Rickards thinks the problem is that not enough attention is being paid to the various crises the world is experiencing. In the words of The Economist, quote, "This war in Ukraine is accompanied by a financial and economic war between the US, UK, EU, and Russia, involving extreme financial sanctions, including the seizure of the central bank reserves of the world's 11th largest country. That financial war and the accompanying sanctions have disrupted supply chains on top of the disruptions already present," he warned. What does Rickards mean by that? And why should we look at the problem as a whole? Well, before we get to that part, we're halfway through the video, so if you're still around, we'd like to thank you for sticking around and supporting us. If you want to help us a little more, you can leave your thumbs up inside the video. This way, the site can see that you like the content and recommend it to more people. Stick around to hear James Rickards' theories on the dollar. According to The Economic Analyst, neither the tendency of the world's central banks nor the difficulties that have plagued the planet in recent years have managed to raise the price of gold, reaching the maximum figure in which it was exposed. The price of gold was set to rise in August of 2020. In those years, when the pandemic was hitting people hard and nations did not know what to do to combat the virus, the precious metal was scarce and amounted to an impressive $2,068 an ounce, equivalent to 31.1 grams. The price surprised and frightened many investors, who did not expect gold to rise so much in such a short time. Although a significant increase had already been seen in March of that year, the rise that occurred in August far exceeded many people's expectations. At the same time, the real reason for the price increase was revealed, which in turn would explain the situation gold is experiencing with its break. Quote, "The real headline for gold, and the main reason why gold has struggled over the last 2 years, is the strength of the dollar," said James Rickards. That's right, the reason gold is still not growing and its price remains passive is that its price is molded to become a mirror that reserves the strength of the dollar. What do we mean by that? Because a weaker dollar gives us a much higher dollar price for gold, and if the dollar is strong, the price of gold goes down. Strange as it may sound, this is how the value of gold is measured, and that is the main problem facing valuers. Against all expectations, and despite inflation, the dollar continues to remain at a convenient supply-demand price. Likewise, until the dollar weakens and stock markets panic, the price of gold will remain unfavorable for some nations. Quote, "At that point, the dollar itself may cease to be a safe haven, especially given the aggressive use of sanctions by the US and the desire of the economies of China, Russia, Turkey, and India to avoid the US dollar system as much as possible," says Rickards. When that time comes and the dollar is no longer considered reliable, the world will turn to gold. From what James and other economists have analyzed, the day appears to be approaching when the dollar is no longer considered a stable currency. When they begin, stock markets and money cabinets assume that gold could reach and far surpass its 2020 peak price, reaching a whopping $2,300 per ounce of the metal. And with that, today's video ends. Although gold does not seem to be at its best in terms of value increases, we can say that of all the precious metals, it is one of the safest and most stable to invest in. Therefore, if you're thinking of buying a commemorative coin with a good percentage of this material, or if you want to inject a certain amount into a company whose raw material is gold, then you can be sure that your investment will be in good hands. Not surprisingly, gold was and still is the most precious metal in the world, so would you invest in it? How would you do it? Leave your comments on the topic, and don't forget to post your suggestions for new topics in the messages. We're reading them. Thanks for sticking around to the end, and be sure to subscribe. That and your likes give the channel more visibility. See you next time.